I think right now banks or in many times the regulatory agencies require them to have internal audits. And they can be external internal audits or they can be internal. The smaller banks typically have to go outside to an accounting firm or consulting firm, just like DD&F, that come in and evaluate their control system. And it can be a fairly comprehensive process. It can take place over a year. You look at multiple controls over each quarter. But it is critical. And internal controls is how you catch fraud, and it's how you avoid someone getting into your bank and really stealing you blind. I think when you think about internal controls, it's fairly comprehensive. You can think about tellers, being sure that the tellers have control. You can think about how checks come into the bank, whether it's from title companies or whether it's from customers, what kind of controls there are with the mail. I think you can look at your wire room at the bank. That's where you can steal the most money. And I think we're seeing a lot of wire fraud nowadays. And people that have accounts have been hacked and are going in, the hackers are going in and trying to initiate wires. And I think, as we think about the person-to-person payments and the speed of payments in the future, fraud's going to increase, because right now, if you wire money to another bank, it's possible to call that wire back or to stop that wire. But if you're going to instantaneous transfers with a person-to-person payment, you can't call it back. It's gone. It's like making a payment through one of the wire services or one of the payment services. It's gone. Once somebody picks it up, you can't call it back.